Thank you, Mr. Kaushal, for joining us on ET Now. I'd like to start by taking a few questions on the macroeconomic scenario. If you could start with India and kind of statements that we've been seeing from New Delhi coming in. The finance minister seems to be doing a lot in terms of trying to bring the economy back on track. A lot of statements have come in from New Delhi. Just like to understand from your point of view, do you think that a lot has been done or that a lot still needs to be done going forward?
I think it's both. A lot has already been done. And I don't think these are just statements coming out from Delhi. The finance minister in particular has reached out to the investor community, has reached out to the corporate sector, has reached out to bankers to get their feedback. And I think we are seeing the first order impact of that in terms of, greater FII interest in the Indian markets. Clearly helped by the global liquidity. But I think we've come, or at least done better than what we were doing last year in terms of sentiment. So we've kind of crossed that hump. But in terms of the real economy, I don't think corporates have yet started investing in a big way. And I think that's a matter of concern for all of us. And that's going to take time. I think the sentiment on that front is quite weak. And a little more would have to be done in terms of the projects which are stuck, whether it is because of policy delays, whether it is because of linkages, fuel linkages, so on and so forth. I think those need to be addressed for the revival to really pick up momentum in the real economy. But we've seen the first order impact, which is quite encouraging.
True. Now, in terms of the global scenario, like you mentioned, a lot of the global liquidity has actually impacted our markets. It's actually helped us bring in a lot of capital. Going forward, how long do you expect this whole flood of liquidity to remain in the global markets? And really, do you expect that the US kind of pulling out of QE would really impact us in a big way?
I think it's going to have an impact. We can't deny that there's going to be an impact. And you saw the repercussions of a statement that came out a few weeks back. The markets were quite shaken up. I think that will have to be done in a measured way, and I think the policy makers and the regulators realize that. We are in a very interesting phase. Very interesting phase that if the US starts performing well, in one way it could be negative for the global economy because the liquidity could be pulled back sooner. If China doesn't perform that well, it actually could be better for Asian economies in a sense, in a perverse kind of sense, and for the Indian economy because commodity prices come off. So there are various factors at play here. But coming back to your question, I think at some point in time, you're going to see the liquidity being pulled back. And it is going to be, in my view, in a measured manner, staggered over several months, and hopefully the impact would not be as dramatic as we are fearing that it could be.
Right now we're also seeing somewhat of conflicting signals coming in. On one hand, we are seeing the equity markets really perform very well. On the other hand, the currency markets are showing signs of weakness. So what kind of message should we really take from this, given the fact that the rupee really seems to be going through a very rough patch at this point of time?
I think a couple of things. One is the equity markets are leading indicators. So clearly from a macroeconomic point of view, there is a sense that we have hit the bottom. Inflation is coming off. Interest rates are likely to come off. Commodity prices have come off. Gold prices have come off. So those are all positives for the Indian economy. In terms of currency, I don't think it's just the Indian rupee. I think it goes across the Asian currencies. On one hand, it is dollar strength, driven by the better performance in the US economy. And on the other hand, there is an element of competitive devaluation taking place to make exports more resilient. I think that's a factor at play. We have our own challenges on the current account deficit, which will continue to create a pressure on the Indian rupee. But as you mentioned, we are seeing robust inflows, which should create some sort of a support level.
Right. Now, you've said in the past that banks are really a reflection of the economy. Going forward, just like to get your view in terms of, from your interactions with the various corporates you speak to day in and day out, what kind of early signs of growth are you seeing? Are you seeing any green shoots, so to speak, in the economy picking up right now?
I think green shoots are that they're quite hopeful that the government will start taking action, which they've already started taking action on the policy front. I don't think there's an expectation of any big bang reform taking place. I think the expectation is execution, focus on execution. As I said in the beginning, some of the projects that are held up, get those going. So there's a lot of focus on what, for instance, CCI is going to be doing. So I think that's the area of focus. Now, we are not seeing a lot of new projects being announced. There are obviously, certain sectors where, because of capacity constraints, they could be, expanding capacity. But I think there's a lot of focus on the existing projects that are stuck, reviving those.
Well, one reason being pointed out as to why a lot of projects are stuck is basically the high interest rate scenario. What's your view in terms of interest rates? Do you think that the RBI has the headroom really at this point of time to go ahead and cut rates in a significant way to kind of spur growth going forward?
I don't think projects are stuck because of high interest rates. I think that would be an incorrect statement. I think the point you're probably trying to make is, has the slowdown happened because of high interest rates? Maybe to some extent, but that was in one sense the intention to bring down inflation. So you got to sacrifice some growth if you really want to bring down inflation. I think the bigger issue goes beyond just interest rates. A bigger issue is that the growth rates have come off. And I think the growth rate, one has to keep it in perspective here, that the growth rate has not come off only in India. If you look at the BRIC countries, Brazil is at sub 2%. In fact, all of them are at sub 2%, the latest numbers, except China. So you've got Russia at sub 2%, you've got South Africa at sub 2%. So it's only India and China that are 5% plus. And even China, we know that there is clearly signs that the economy is slowing. So we are in a very interesting phase where you've got US actually looking like is going to outperform in terms of economic growth. You have some sort of stability coming in Europe, but you've got the BRIC nations slowing down, and some slowing down quite sharply.
Fair enough. But from the RBI's point of view and from the interest rate point of view, of course, there is a kind of a argument that inflation is very high at this point of time. The RBI can't really cut rates very significantly. Do you think there is any kind of headroom for the RBI to cut rates come the June quarter?
I think headroom probably is getting created with inflation coming down, commodity prices coming off. If you have, the current account deficit coming under control because of commodity prices down, as I said, gold imports, at least the gold price coming down. So there are, clearly factors at play which would, in the coming months, give some headroom to the RBI to cut interest rates. I think it's also important that what needs to be done to have the transmission into the real economy of lower interest rates. And for that, I think liquidity has to be improved. And probably at some point in time, RBI will probably look at, addressing that issue as well.
Fair enough. Another criticism that a lot of people have been talking about is that this whole argument of liquidity seems to be created a lot by a number of banks themselves, given that a number of them are really holding on to a much higher SLR portfolio than they really should be holding on to. Do you think that there is any merit into this argument?
I think the liquidity, let me just clarify, what we mean by liquidity being created is the CRR cut, which will at least give you an assurance of supply of liquidity. Deposit growth has been muted. So banks are challenged in a way in terms of raising deposits. And because there are multiple options available, a lot of the savings have gone into physical assets and other financial products. So there is a challenge, and I think that needs to be addressed. As far as SLR concerned, I think it's an individual decision each bank takes, depending on their view of the interest rates. And I think we just have to live with that.
The other challenge, of course, that banks have been facing is that of asset quality. We've seen almost every bank really struggle with this, and Standard Chartered too has seen, its fair share of problems. Do you think that we're going to see a better time as far as asset quality is concerned into FY14?
I would hope so. I think, as we discussed at the beginning of the interview, banks are a reflection of the economy. So we shouldn't be surprised by that when there is a slowdown. Banks are going to manifest that slowdown in terms of stress in the economy, in the portfolio. I believe most of the loans have been restructured or the issues have been addressed. With interest rates coming off, with some of the projects getting cleared, generating cash flow going forward, or at least getting the financing depending on what stage they are, I think things should improve going forward. I think we've hit the bottom as far as at least the bad loans are concerned. And clearly, from where we sit, we are very comfortable with the quality of portfolio we have, and we are seeing things going forward improve.
So we saw a few reports coming out that Stanchart had a few problems with a couple of large corporate accounts. I take it you all have already rectified that. And going forward, has this incident really made you all a little more cautious as far as lending to Indian corporates is concerned?
No, we've not had any abnormal kind of an issue as far as the portfolio is concerned, except for one name which got impacted by a change in policy, particularly in the telecom sector when licenses got cancelled. Besides that, I think we are very comfortable, and that's in the past. We've got over it, we're looking forward. So clearly there is an improvement that we have witnessed, and we're hoping that going forward we'll continue seeing that improvement. This is a huge market for us. It's number 3 by any metric that we take. So we are continuously investing in this market, be it by way of branches, be it by way of organic as well as inorganic growth. So it's a very large market. We obviously look at things more cautiously depending on what stage the economy is, and as bankers we are expected to do that, but we are not cutting back in any form in terms of lending or participation in the marketplace.
Fair enough. Now, over the past decade or so, we've seen Standard Chartered really play a very key role as far as M&A from the Indian side is concerned. You've been part of most of the largest M&A deals concerning the Indian corporates. Given the fact that this pipeline seems to have slowed down a little bit, has that really impacted your revenues, and are you looking at any other avenues of business really to augment this?
Yeah. In fact, if you look at our results for the last 2 years, they clearly have been impacted by the slowdown in corporate activity. And that should not be a surprise to anyone, because as you said, the number of deals, particularly on the M&A front, have come off, and so has the corporate activity. But we have developed other avenues of revenue growth. For instance, our retail business is doing extremely well, a strong double-digit growth there. Our flow business, as we define it, transaction banking, cash trade, normal plain vanilla FX flow, doing very well. So it's getting quite well balanced from other streams of revenues that are growing.
Right, but do you actually expect that the M&A pipeline could possibly grow going forward, and are there any signs of that happening?
We are seeing M&A activity happen. I think it's all relative. I think it was at its peak in 2008, 9, 10. Compared to those levels, it's come off. But M&A activity is still happening, and I think it's a matter of confidence. And we all have to be, we all aware that if the confidence is up, growth rates are up, people will then make the investments. So M&A is basically what? It's investments, right? You invest either in capex or you go and inorganically go and acquire. So the confidence level has to come up, which means, demand has to be there. You should be seeing good growth in the economies. So I think this is we're taking a breather. Perhaps it'll go on for the next 12 months or 18 months, and then you should see activity come back.
Fair enough. And like you mentioned, retail is another point that you're actually looking at with a lot of focus. But given the kind of traditional focus that you all have had on wholesale and corporate banking, is retail something that can actually kind of replace the kind of revenues that come in from there?
I think it's not the question of replacing. It is in terms of the contribution, the way we look at it, at least the contribution to the delta growth. And I think there the retail is making a fairly significant contribution. The other medium to long-term objective would be how do you balance the business. So you need two engines. You need engines which are equal sort of in size. It's not going to happen in a year or two, but over the medium to long term, that's what our objective would be, to get as much balance as possible in our businesses.
So you all have become the largest issue as far as credit cards are concerned. You all are also possibly going a little harder in terms of the other retail loans. What's your strategy in terms of credit cards and home loans going forward?
Credit cards, ours is, we've have a few successful alliances, so that's helped a lot. Our approach has been a relationship-led, so it's not just about giving the credit card. It's about looking at the customer proposition more holistically, and the customer requirements and needs more holistically. And I think that strategy is working well. Have we got it 100%? Not yet, but it's a journey. And I think we've started off well in the journey. Home loan, again, it's part of, we don't have a product-led strategy. It's based on the customer needs. And for instance, employee banking is an area where we've seen fantastic growth. And that's a good hook for us to get in the customer proposition in, offer the products the customer requires, and it's driven by the customer and not just having different channels selling different products coming in an isolated manner.
Fair enough. But we've seen actually a number of foreign banks and also, of course, a lot of Indian banks really look at the home loan piece at this point of time for stable growth going forward. In fact, HSBC is offering home loans at almost the same rate as State Bank of India. What's your strategy on home loans? Will you be looking at any aggressive offerings over there?
I can't comment on competitors. They have their own strategy. But as I said, our strategy is customer-led. It's not led by pricing, because that's not. If you're going after based only on your pricing, it's going to be very difficult. You can do it that much and not beyond. Ours is about understanding the customer based on proper analytics, segmentation, and then going with a proposition which is slightly more holistic than just pricing led. And we are very successful, I think, amongst international banks. And as far as home loan is concerned, we are the largest.
Coming to one of the recent acquisitions that you all made, the one of the Morgan Stanley private wealth management business, I'd just like to understand how this plays into your strategy for India, and going forward, what kind of synergies will it bring with it?
Yeah. First of all, we acquired a part of the portfolio or part of the business, private bank business of Morgan Stanley. It fits in very well with our current strategy on private bank. Private bank is a business that is growing well for us. It augments the private bank business. It gives us access to the client base and to the AUM that comes with it. And we are very hopeful that we'll be able to do much more given the product portfolio that we have and given the franchise that we have in India with this acquisition.
Right now, Stanchart is of course no stranger to large acquisitions in India. We've seen over the years from ANZ to the Barclays retail portion in India. Would you be looking at any further inorganic expansion? What kind of clients could we be looking at?
We'll obviously look at opportunities as and when they come up. We're not going to go and acquire every opportunity that's there. We're very, very selective, and we'll look at opportunities as and when they come up.
Right. So also, just like to move on towards the regulatory point of view. We've seen the RBI come down slightly heavily in terms of foreign banks of late. You all now have to comply to the same priority sector norms as the domestic banks do. What's your view on this? Do you think that this is a little unfair from your point of view?
Life is not fair, so I'm not going to comment whether it's fair or unfair. I think what you're alluding to is the direct lending, indirect lending, etc. under the priority sector, because exports we used to do and we used to meet our requirements quite easily. It's still early days. We've drawn up our plans, we've submitted our plans, and now we've got to execute on the plans. It's still early days. We clearly don't have any experience doing agricultural lending, for instance, in India. So we'll have to learn that business, and we'll have to contribute and grow that business as per our plans.
Right. So do you think that this is really an opportunity for you all to grow your business, to augment your revenues, or is it something which would possibly bring with it a lot more costs, which would possibly outweigh the benefits?
Still early days, as I said. I wouldn't go out and say it's going to augment my revenues, neither am I going to say it's going to blow up my costs. It's very early days. The plan is staggered over 5 years, and we'll give it our best shot.
Fair enough. The other regulatory concern, of course, is that of the subsidiary model, and private banks have been talking about how there are tax treatment issues, a number of issues which could really come with it. What's the sense on that? Have things really moved on that front yet?
We are awaiting the final guidelines, so I don't think it can be a source of concern, as you say, unless we know what the final guidelines are. And we'll have to review the guidelines before we make any decision and comment on it.
Fair enough. Now, over the years, actually, we've seen a point of time where Stanchart was the #1 contributor to Stanchart PLC's global profits. Over the years, that seems to have come down a bit. There's a criticism that Stanchart may be losing its past glories in India. How do you really react to this kind of criticism?
I think if the competition thinks and gets complacent, I'll be very happy with it if they think we have lost our past glory. India was briefly the number one market for the group. And the two markets that are ahead of us are global financial centers. They're based in global financial centers, whether it is a Hong Kong or a Singapore. Without taking anything away from their performance, they also benefit from a lot of the regional flows that come into those markets and get booked on those markets. So it's great for us. It's fantastic for us. But as far as India is concerned, I think we are doing extremely well. We're very happy with our performance. And very shortly we'll be announcing our results for 2013. So hopefully that should take away any of the questions that you have in your mind.
So could we be looking at better days ahead in India kind of reaching that number one position again?
Better days ahead, definitely. We don't, it's within the group, so number one or number two really doesn't matter.
All right. Also, I'd just like to bring your attention to a recent issue that's come up in the banking sector, that of a much publicized sting that was carried out in a number of banks. Of course, your bank wasn't named on that. I'd just like to understand whether these issues in terms of banks violating KYC and AML norms, whether you think these are isolated bank-specific issues, or is this, indication of a larger system-wide issue?
I think as far as, I have read about it as you have read in the newspapers, I think the banks take this issue very, very seriously. We definitely do. But occasionally you will have the violation or the breach, as you say, based on how well it's executed on the ground, how well your policies are implemented. And that risk all banks run. And this is a continuous process. You cannot say that, I've implemented this particular initiative and I'm okay and nothing's going to happen in future. We are in the risk business. We've got to manage it well. But I'm pretty certain that every bank that operates in India, the larger ones at least that you were kind of alluding to, have very, very strong controls. So I'll leave it at that.
Right. But what's your view in terms of the incentive-based structure that really governs a lot of banking activity, especially in the retail front end? We've seen a lot of these issues crop up from time to time, and the fingers always pointed out at the fact that cash bonuses are being given out to employees, and that's of course the reason which is which is leading to these kind of lapses at these banks. Do you think this is something that needs to be tackled at on a priority by the regulators?
I don't think incentives per se are the issue. It's how you implement the incentive scheme is more important. And if it is just purely based on sales, without looking at the service quality factors or the control lapses or the breaches in policies or regulations, then I would have an issue. But incentives per se, I don't think there's anything wrong with giving incentives to encourage sales. But I think it comes as a package, and controls have to be very robust when you're driving sales.
Fair enough. And of course, the RBI is going to be giving licenses for new banks very soon. What's your sense on, the whole environment really changing? Do you think, firstly, that corporates should be allowed to set up these new banks? And secondly, do you think that the Indian scenario really needs new banks at this point of time?
I think on your first question, whether corporates should be allowed, that's a call the regulator has to take. That's not something that I can comment on. And we see it in many markets globally that corporates own banks. India is in many ways, particularly rural India or the tier 2, tier 3 cities, underbanked in a sense. And more banks to that extent, and the focus as the policy is crafted is quite balanced. So you'll have to have a certain number of branches, 25% of your branches in rural areas, so on and so forth. So that will give it a good balance. And I think it's going to be healthy competition. It will take a few years before these banks become, large competitors. But by the time the good news is that the Indian market is also growing quite rapidly. So there is room for everybody to be participating in this growing market.
Fair enough. And before we wrap up, just one last question. In terms of your IDR, you've been the first and remain the only MNC to really have issued an IDR over here. How's the experience been? And are you a little surprised that not too many other companies have come forward yet?
I think it's been, as you said, the first IDR. The policies around it, the regulations around it are taking shape. Some have already taken shape. So we are hopeful that over the coming years, this would be an area where, MNCs can come and raise capital, list in the domestic market, and encourage the growth of the domestic market as well.
Fair enough. Thank you so much, sir. Thank you for joining us again.
Thanks.